Hello, everybody, and welcome back to the Perpetualpips podcast. This is episode 7, and it is titled Limiting Beliefs. We're going to be tackling looking inward, using withdrawals as a tool, cycles, and taking a look at EURJPY and Nas100 to close off the episode. I hope you've all been so good and well. Well, now that we know what we're going to be tackling, as always, let's get it. So I must address the elephant in the room before we continue. I skipped a week. I skipped a week of creating the podcast, rebalancing with myself, realigning. June was shaky in the market, um, as well as planning out the next few episodes. I'm gonna upload 3, if not 4, in this week, just to compensate and to get you back up to speed. And once again, as always, thank you so much for tuning in. The streams have been going up. You guys are tuning in. You guys are following on Twitter, following on Instagram. You're listening everywhere. This podcast is available on, I believe, 6 platforms, including YouTube and IGTV. That makes it 8. So I truly appreciate you guys. Nonetheless, let's get started. I want to talk about limiting beliefs in this episode. It ties in a lot with the second subject, which is cycles. But I want to paint a scenario, right? You tend to have a limiting belief of yourself when you're on a losing streak. You understand what I mean? You start to lose. Maybe you have a bad month, a bad week, a bad few trades. You start to believe certain things about your abilities, right? A certain component in your mind starts to create this flight mechanism in your brain where it's like, I gotta lose less money, so I'm not gonna trade, or I'm gonna stay out of the market for a bit, which can definitely help you, but it becomes a problem if you go into the cycle of belief of, I've lost before, I've lost for a whole month, I've lost for a whole week, I don't think I can do this. That's when it starts to get dangerous. That's when you start to fall into the 99% of traders that don't make it. You understand what I'm saying? What you should rather do after a losing streak is always take a look back at what went wrong and learn. Okay? It's very easy for you to have a limiting belief on yourself. It could not even just have to be with losing streaks, right? It doesn't even have to be the fact that, I lost in last month. You could be making a certain amount of pips. Maybe you collect 100 a week. Maybe you make 10,000 a week. Maybe you make 50,000 in a month. But you have a limiting belief of, I can go higher. As soon as you think about going to 100 or 75, doubling what you make now, doubling your pips, doubling your profits, you have this limiting belief, doubling your 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 your, your doubling your lot size. It's a limiting belief that, like, I'm so comfortable using a 1 lot, using a 0.5, 0.25, 0.05. Can I double it? Can I go 0.10? Can I go 2 lot? Can I go 1 lot? Can I go 10 lot? Gosh, it's a whole new arena, because once you start thinking about going bigger, you also start thinking about the L's, and the risks start to get bigger, right? Learn to manage risk correctly, and you most likely will get burned, but I don't want you to then go from a 1 lot to a 2 lot and take an L and then believe that I'm not ready yet. Take some time, take some practice, hit it up on the demo, Learn to know how much you're willing to lose once you start doubling your lot sizes. But the belief of like, look, I understand and I get it. If you are in the markets just to make a second income, you got a 9 to 5, you're cool. You're cool with a 0.10 to 1 lot. You're okay. You're good. It pays your rent, whatever else money it goes into your savings, whatever. I'm talking to those of us who have a passion for trading the markets. Those of us who want to go full time, full pro, and some of those who have a second income and want to double the lot sizes to make more. It's a limiting belief. You have to look within yourself, dig deep, and know that this is something that you can do, and accept the fact that you are meant to rise, and accept the fact that you're meant to take on bigger challenges, because it's very true. You cannot take on a bigger challenge without a bigger risk being involved. They go hand in hand. Okay, and it's like I say, there are no losses. You go from a 2 lot to a 4 lot, you're going to be risking more. You may take an L in the first trade you take, but you will learn how much a 4 lot loss will take with a certain amount of pips that you put into your strategy. You will now have that in mind to say, okay, I know I could lose this much with this balance, with this lot size, and this many pips involved. However, if this goes right, I can then gain this much. And going from that lot size to the higher lot size makes you more critical about what you're risking. You understand what I mean? You get used to the 2 lot. You know what you're willing to lose. So you've gotten used to it. That's why you reach the 80s and 90% with your current lot size. You start out with the higher lot size and your win rate goes down to 40, 50, maybe even 0. You understand? But you learn. You keep practicing with that higher lot and you end up mastering it. You're going from 40 to 60 to 80%. And then eventually you double again and you double again. Do not have that limiting belief. Look inward, look in yourself, and accept that yes, there are risks. Accept that this could go either way. You could lose, you could win. But it's the basics. Always make sure that you win more than you could potentially lose. You understand what I'm saying? Speaking of the different cycles that the markets tend to go through, as well as you as a trader, you tend to go through cycles. If you, let's say, I'm sure you've been in this situation where you had a great week, you had a great month, 89% win rate, or you took no L's, made a lot of pips in a month, yet you find in the second month you struggle. Maybe you go on a losing streak for the first 2 weeks, or a losing streak for the whole month, or you don't make as much as the previous month, right? It's a cycle. It's like, if you think about the market itself, when the market creates a new high, it tends to pull back. So will you in your trading from time to time, especially when you're a novice, when you're a beginner. You tend to pull back after some great trading. You were very bullish for a whole month, for a whole week, for a few trades, and then you start to you pivot because you're creating those all-time highs. You're just pulling back so that you can continue your bullish trend. You understand? And how you can end up surviving these is not having that feeling that you need to hoard money. You understand? You need to see that withdrawals can be used as a tool. I remember when I started out, I had this belief that like I want to put in a certain amount of money and I want to grow it over a few months. And what happens is, even if you go on a streak where you grow an account, you never know. A day may come where you filled with so much confidence that you've been winning so much that you start to up your lots, you start to risk more, or you start to do everything right, but the market doesn't cooperate. and you've turned 1,000 into 10, but after a few trades now you take L's and that 10 has become 5 or 4. You know what I mean? And then you start to think in your mind, wow, I could have just withdrawn that 6 and had it in my bank account instead of giving it back to the market. You understand? We tend to have this ideology and this thought that like we're all running hedge funds here, where you can only make withdraw once or twice in a year. Or it's like, oh, my goal is to flip this account from 10 to 100,000. Listen, I understand if that's your goal. However, you can have withdrawals on the way. Where it's like you take it from 10 to 25. You're like, cool, great. It's been a great month of trading, a great week, a great few trades. I'm going to take out 10. You got 15. The goal still remains in place. Because now, since you've taken a 10 to 25 and you take out 10,000, you have that 15. You don't know what could happen in the market. You could take that 15 to 12.5. You could take that 15 back to 10. You know what I mean? But at least you've had withdrawals. And then once it's gone from 15 to 10, you could take that 10 right all the way up to 50, all the way up to 100. You know what I mean? But it's like, you never know what's to come next. You could do everything right in the market. But especially when you're still on the journey, use withdrawals as, a tool. 10 to 25, you take out 10, great. Back to 15. You want to flip that 15, 15 becomes 30. Great. You take out another 10, you got 20. You flip that. In your bank, you have made 20 racks. You have deposited 10, you've made it back, plus profit on top. You understand? In your bank account and in your personal books, you've got 20 racks profit. No matter what happens to the rest, psychologically, you're more relaxed. Psychologically, you've gotten rid of desperation. You understand? You take that 20, go buy yourself something good to congratulate yourself, go pay your rent, whatever. You know what I mean? Use withdrawals as a tool. Money is much more useful when it's sitting in your bank account, in cash, in your hands, than numbers on a screen. It's just basic psychology, guys. Now we're going to take a look at some analysis. We're going to be taking a look at EURJPY. Back on the 15th of June, as you can see, you can follow along on YouTube. By the way, I'm going to be posting this screen recording on YouTube of this analysis. Perpetualpips, one word. Subscribe. So I'm going to be, 15th of June, I posted that Euro Yen would lose further gains. Taking a look at Twitter, that was the tweet. Back in the 15th of June, price was at 120.717 at that time, and the consequent tweets. My target for Euro Yen was 119, right? And ever since then, it has been falling. It fell majority of the week, and it's about 43 pip away from the target. Taking a look at what happened ultimately to EURJPY, it hit a high of 124.464 and has been falling ever since. It rejected this and pulled back. And I do believe that it's going to fall down to the 119 level. We will see if it breaks any lower. However, that is my target area, just for it to respect the bullish trend on the lower time frames. If I could just create a trend line over here. Right, so you could see that it broke out there to the 119 level. I do believe once it hits the 119 level, which was a previous a support, resistance turned support back on the 9th of April, I do believe that this could be a strong area for it to hold and try and retest its highs of 124. So we will see how price does react to this level. However, I do believe that price would at least hit 119 on Euro Yen. Taking a look at the 4-hour. Yeah, definitely. That's my outlook. And taking a look at Nasdaq. So Nasdaq had a hit an all-time high this week. It hit an all-time high actually on the 10th of June. The 10th of June. My analysis, as you could see here, was that it would retest the all-time high region. It stopped just underneath the all-time high region on Friday before shorting and pulling back. Currently, a good sub is 99.05 for Nasdaq. Just be wary of this level, 99.05 and 9827. If price is to slide lower than its current 9932 level on Monday's open, I would say take a look at shorts to 9827 and 9752. Take a look at those areas as the previous support liquidity regions. The market did tend was pulling back from the all-time highs due to sentiment being under coronavirus worries. The market is a bit shaky when it comes to coronavirus, new cases being reported, and the likes. However, just from a technical point, it's quite simple. It's simply a pullback after all-time highs. I don't like to get to make huge calls in the market. For instance, some people are like, no, the market has created all-time highs. The market is going to sink the way we saw it in March. I trade what I see. I trade according to the levels. I don't know if Nasdaq is going to melt down to 6,600 level again as it did in March. That could happen. That could not happen. This could be a minor pullback. This could be a major pullback. Price could go down to 7,000 again, or price could fall to 97.52 and end up at 11,000 by the end of the week. All I'm gonna do is trade what I see, and we got a rejection on Nasdaq at the 10,125 level. And my bias is if we do see further shorts on Monday open, you could short the pair to about 9827, TP2 being 9752. But just be wary of 9905 level. Price could potentially find support right here and bounce right off it as it did previously on the 16th of June. Price hit 9,008 and longed all the way up to the 10,016 level, and then consequently went back down to the 9905 level, hitting it twice actually around the 9875 to 9905 level. And on the 18th of June, it hit 9881 and ran all the way up to 10,125 before rejecting this on the Friday's close. So just be wary of the pair. A lot of you may be in shorts from Friday. I don't believe it's going to be affected that much. I don't see you having to have any worry. Those trying to enter shorts on Monday, do be cautious, because Nasdaq is a high pip asset, so just be careful there when trying to enter shorts, because it's never wise to try and enter a trend when it's already gone. If you had analyzed for it to hit the all-time highs and then enter shorts and you've missed this, then just wait it out. I'd rather analyze for price to hit sub again before longing it, and retesting the all-time highs again, trying to break this time. That's the most viable option for me going into July. However, my previous analysis did come through. Price found sub at 9,500 level and ran all the way up to 10,125 again. So I do believe we could potentially see a pullback before any retesting of any all-time highs. And yeah, that's it, ladies and gents. Thanks so much for tuning in to this episode 7. Follow on Twitter, Perpetualpips, one word, Instagram, Perpetualpips, YouTube, Perpetualpips. Find the Perpetualpips podcast anywhere. You can say, hey Google, play the Perpetualpips podcast. You could say, hey Siri, play the Perpetualpips podcast. Try this right now. You can Google Perpetualpips podcast. You could find it on 6 streaming services, and you could find the video on IGTV as well as YouTube. Perpetualpips everywhere, guys. I hope you guys have had a great June in trading, a great June, and kept warm. It's been cold down in South Africa. And I'll see you guys in episode 8, which should be anytime soon. Nonetheless, guys, thanks. See you in the next one.